Negative DMI trending with a negative MACD but a positive rate of change. Look at that coil. What the fuck is it going to do right here? I'm interested. I really want to see Tesla pop tomorrow. This seems like bullshit right here. Seems like bullshit right here. Like, if you want to buy Tesla or EVs, if Tesla gaps up, specifically tomorrow, above 420 and comes down and retests the middle Bollinger, fucking buy it.
Just then, by sheer coincidence.
I'm so excited, I just can't hide it.
Hello, YouTube. All right. This is my first YouTube video, guys, about the stock market and the current state of affairs that we're in, what we're going to, and what we're going to be going through, quite possibly for the next year or so. Okay, I'm going to do a TLDR version for what I think is going to happen the next couple of months and about the next year. What I expect to happen is the next month or so, until approximately the middle of January, we are going to skyrocket in the market. Thereafter, within the first 6 months of 2021, I believe it should happen somewhere between the middle of January to the middle of April. Give myself a little bit extra time for the strike prices, the expiration prices, to the middle of June. But within about the first 4 to 6 months of 2021, we're going to have at least a 20% correction from the top. The higher it goes, the bigger the first move should go. So if we get to SPY 400, give or take, we should go to probably at least 3,200. My targets are going to be somewhere around 3,000 to 3,400. Then this is the tricky part. It ends up having to move in a very specific pattern for the next 3 or 4 months, from April to approximately July, August. I have a very specific pattern in mind. And from there, I think we go somewhere like this, April up to here. And I think we will then have one of the worst stock market corrections in history, August, September. And the last, it's a wave 3, probably get, wave 4 or 5 into the end of the year, into December. I think that is what's going to happen, but I think there are other patterns that could happen. The only other one that would happen is people are saying that this is a wave 5 that we're started. This was a wave 4, the COVID crash, and this is a wave 5, but this is a wave 1 of 5. People think that we're going to end up having a wave 2 of 5, which would represent this right here, the move that's coming down. Wave 2, and then they think a wave 3 is coming, which would probably feel like a wave 3 with how sharp it should be. But I actually think it's actually going to do this instead. Now the question is why I think that. I think that for so many reasons I cannot put into this one video, unfortunately. There are so many reasons, but I don't need to prove it per se. I will let the stock market prove it for me, and then after it does what I expect it to do for the next 6 months or so, when it starts to get close to it, I will be able to figure out approximately exactly when this top is going to be, and about the pattern that it's going to create. What I think about the pattern that's going to happen for the next 4 to 6 weeks is it is going to look like what we saw at the beginning of January 2018, which was this. A flash crash, well, not a flash crash, but a very, very sharp move to the upside, brutally bullish, relentlessly bullish. And it started with a very volatile event like that. Very sharp, very quick. That might happen this week with the Fed. We're going to look out for something like that. And if we start going towards all-time highs, I do believe we're going to get something like this. I truly believe that we will not top in the market until we have a move like this. Very important. I do not think we will top in the market until we have a move like this. And so something you need to realize also is the tops, that when you're seeing these massive overvaluations and this euphoria and this insanity, that's what you're supposed to see at tops of markets. That is what's supposed to happen. So for people who are arguing right now that this was a wave 4 from the bottom here, people argue it's like wave 1, wave 2, wave 3 ended right here. They're saying this was wave 4 and then we're going into wave 5. And this is wave 1 of 5, right? 2, 3, 4, 5 over the next couple of years. This, in my opinion, was not a wave 4, or this was an A and this is an overextended B and we're getting a C. Or this was a 4 and this is a 5 and we're going to get a massive ABC here. What people don't understand in terms of wave dynamic is the correction that happens here, COVID crash, in terms of a wave dynamic function, this wasn't a real correction in the sense that this didn't let the market build up enough momentum to go up for years. Say it again. This correction did not allow the market to build enough momentum to go up for years. When you have a correction, a flush happens. Down 3%, down 4%, down 5%, gaps down 8%, and then goes straight up. That's a flush. That's what happens at the bottoms of corrections, real corrections that allow for massive move higher. Those are real wave-like movement. And what that means is that either you're supposed to get a secondary bottom, fill the gap, or goes lower, or checks another time, or it's not done with the correction. And you end up making another wave higher, and then it either comes back and checks it or goes below it. This was not clean. It does not have enough momentum in it to go up for years. So either we recheck this sometime next year, or this is the pre-move to the move to come. And I actually think that's what's happening for various reasons. Also, on another note, another way you can look at the wave 4, quote unquote wave 4 mechanic of this is every major wave you had. If you ever look at the DMI and the ADX, it's one of my most favorite indicators. This was a wave, .com bubble, right? Major wave, ADX participates, looks healthy. That's a wave. The crash, wave. See how this was not a wave? This whole move up, it was not a real wave. It's more like a coiling, which is the coiling for a future wave. It wasn't really a wave. Financial crisis, a wave. DMI goes up, ADX goes up with it. You could see how it looks like a wave. Wave. Here, wave, it's clean, it's healthy. Wave, it's clean, it's healthy. You blow off top. Right here, January 2018, it had the highest inflows for ETFs of retail ever in history. So top here. Now, if you follow the DMI here, popped, it went down and sideways, down and sideways, down and sideways. It had its first pop in August, which didn't even cross the negative DMI, which in fact means it's actually a reflexive move from the bottom rather than a real bull true move. This is a wave. It's a true, one wave, three wave, five wave, whatever you want to call it. This usually means that it's part of a correction or it's trying to get out of the correction. So it still could be either or. It didn't even break the first true up move from here, from the top. It didn't even break the downtrend. We are making the first true bull move for the first time since 2018, blow off top. Okay? And what did we get? We got the best month in history for the Russell. The best month in the Dow since 87. And so it is a fractal of previous times. And what's scary about that is when you see fractals, 2008, 1999, 87, 82, that we keep seeing these in headlines, it's representative of a different part of the wave in the market. And I think that this is part of the top of a wave. So the difference between now and 2009 is, see that? Whee! What did we do before we got the big crash? We topped. We went down a little, we went sideways, went down a little, we went sideways, and then we crashed. That is a healthy wave. What did we do here? Oh, that's right. We went from all-time highs to the fastest correction in history. For the NASDAQ, it was like the fastest NASDAQ bear market correction in history, right? That's not a wave. Where's the wave? Where's the wave? There is no wave. What happened was you had the insanely sharp down move. It spiked up just for that one brief blip. And this is the residual momentum. This is the wave from this crash. And it's just a reflexive bounce. That's all it is. So the wave structure is there's something much, much bigger happening right here. There's a much bigger wave at play, and people have to figure out what it is. What I think it is you notice how we had this parabolic move here, right? Huge uptrend, and then we had the highest on a closing basis VIX move in history, which I will explain in a little bit, where it went down here. So you had a freight train go into a huge smack right here, right? then you get residual momentum, and then you get from the uptrend for the last since '09 or from 2016, and then you had the residual from here, from this, and then you had the residual again from the uptrend, and then you had this, right? And you ended up getting the megaphone pattern. And it's hysterical because I literally drew this megaphone pattern back over here. And in this, the way the correction moved here, because the VIX did not spike that high, and the way it moved up here, I knew we were going to correct and that we were going to retest this line. but lo and behold, so it broke the high here in October. I go, okay, as soon as I saw it started breaking, I said we're going to have one last move higher. Caught it, short at the top, covered the short at like SPY 300 because who would have thought that SPY would have dropped from here to here? Who in the world would have thought that? It's actually insane how I could sit there for like 6 to 8 months and say, oh, we're going to crash, we're going to crash, we're going to crash. And then we start crashing and I'm like, nah, we're not going to crash that fast, that far. And of course it happened, of course. Oh, so anyway, but I did buy the bottom, so it is what it is. But I had this mapped out, got that, and the reason why you're getting this megaphone pattern is because you had this huge parabolic move go into a huge VIX move, and then you get this ping pong effect, up and down until you go through it, and then we finally broke out of it. I think it was July 2nd. Now, if you understand why it did this and why it did this quick down move and went up, I'll explain it to you. Is that when a wave completes and it blows off and exhausts all of its energy, it needs to consolidate and then have another stabilizing wave. It's kind of like exactly what happened here right before the crash. We ended up getting this wave right here. There was no wave after the dot-com bubble. There was no wave, and then it stabilized up right here for the crash and for a future wave. That is what that was for. What are we doing right now? We are stabilizing. What this move right here is for, we are stabilizing for the crash and a future wave. So the sharper this move up, the more euphoric for the next 2 months or so, and then after the small correction, and then depending on how it moves middle of the year, it'll be specific. But these moves here should be a stabilizing move. There was no stabilizing move since 2018. Since this VIX move here, there was no stabilizing move. It had no chance to stabilize for a massive down correction. This was just the momentum from the entire parabolic move for the last, since 2009, being wrung out of the market. Where's the stabilizer move? There is none. That is literally what it's doing. That is literally why COVID behaved the way it did, why it had a stepping pattern all the way down. And this is how waves work. This is how waves work. And this is why you get this really sharp, non-wave type of pattern. So what you want to see is you want to see the blue go up and do something, come back down, and then have some sort of blow up move sometime in the middle of next year, something like that. And that is what I expect, and that's what I'm going to be trading. Okay, I think I'm going to finish off with just looking at the MACD of the yearly VIX. I think it is the chart and the technical indicator that sums up the current wave perfectly. And I could actually explain it perfectly. You'll have to take my word for it. I have to teach wave dynamics in other YouTube videos because there's just so much, there's literally so much about it. But whatever I say, you'll just have to take for face value and trust what I have to say. This chart is scarier than you can even imagine. Okay, this is 1987. The VIX wasn't around then, but they extrapolated the data as to where the VIX would have gone if we had that 20% correction, and you end up getting a print of 172.79. Okay, it's up here. Whee! If you actually look at the trend lines of where the VIX has been going all year, we've been bouncing off of this trend line all year. All year. As you can see, it was literally a magnet all year. I promise you, it was bouncing off of this line all year violently both directions. So what happens when you break a trend line that goes from 173 to 20? Well, some things happen. And people would argue that this was that. I would disagree. I would disagree because wave dynamics, this went up and this came down. Once the yellow MACD touches the 0 line, which was right here, 95, it activates. If a wave is positively trending or wants to be bullish, for example, you want to see the charts activate on the 0 line, and you would see either a huge candle, you would either see something on news and a huge gap up on high volume, things like that, to consider the confirmation of a trigger, an activation of the 0 line. And I guess you could say the 1988 crash and the dot-com bubble was that activation, right? That's what we ended up getting right here, 97, 98, and it went up. Now again, it came back down, and the low here was $8.89 in 1993. $8.89. Keep that in mind. Now, came back down. In 2008, for the financial crisis, it touched the 0 line at the start of the month. It touched the 0 line at the start of the month, but because it went up so sharply, 2007, 2008, and it went up really sharply, it didn't close on the 0 line. And when you get that, there's only two things that can happen, mostly 95% of the time, is either it's gone, it activates so sharply and it goes and it's gone, you're not going to see it anymore, or it does what it did here, where it goes, gets rejected, because apparently there was a trend line here, gets rejected, and it ends up consolidating into another wave to the downside before finally ends up going up again. And that's exactly what it did here. Went up, activated, did not close on the 0 line, came down into the 0 line, activated, and I will show you what happened in the market there, activated. That's the first wave, consolidation, and here it comes. You're going to have a wave right here, 2020 and 2021, a continuation wave of the financial crisis, which started from 1987. And this is why you're getting headlines from 1987, the best month in the Dow since 87, the worst 2 weeks from 2008, the best 2 weeks from 2009, all the fractals of psychology, of numbers, of everything, because it's all one wave structure, one cycle. Now, what you're going to get here is this wave coming has the strength of the financial crisis behind it. I'll say that again. Based on the wave dynamics, this has the strength of the financial crisis behind it, plus everything from 2008 to now in terms of negative momentum. Now, that is something that should scare everyone to death, because it is extremely likely that we break 173 on the VIX next year. I don't know what will cause that. I don't care. But the waves show that it's going to happen. So you're saying that the waves predict the future? Yup. Stocks and the stock market literally predict the future. They do it all the time. There's this guy named Dr. Arnout something. He writes articles. He talks about the Elliott wave. And I love the guy because he always does Elliott wave analysis. That's always correct, for one. And he said sometime in an article where he looked at Tesla right before they announced the split date, that it was going to skyrocket at this date. And he said, based on the Elliott wave, it was supposed to skyrocket exactly on that day. And the news just happened to come out on the exact day that it was supposed to come out. And I laughed. And he said in the article that it didn't matter if Elon Musk announced that they were going to start selling yellow submarines, it was still going to go up. And he understands that that is how the stock market works. Anybody who's played the stock market for years, or follows the Elliott wave, or follows the stock market in general and is good at it, understands that news comes out exactly when it is supposed to, every time. And then the people are like, well, what happens when it's bad news and it goes up? That means something too. What about good news and it goes and it goes down? That means something too. So everything has a place and a time. It's basically perfect. It's actually amazing what the stock market actually does. So with that said, everything is supposed to happen exactly when it's supposed to happen. I don't know what is going to cause this to go up to 170. I don't know. I don't care. What I will do is follow the waves, follow the wave dynamics all year, and figure out if it's going to happen and when it's going to happen. But the possibility is that it does happen. And if that happens, ladies and gentlemen, We will correct approximately 60 to 70% in the stock market. Even though that this has the strength of the financial crisis behind it, doesn't mean that we're going to go below the financial crisis low. That's not how that works. That's just not how that works. In fact, it'd actually be better, or it would be more indicative that it doesn't go below it. But this type of correction would be legendary. So it came down into the zero line, right? It activated here, but then why did it go down? Why did it go down right here? Why did it go down here if it activated? If anyone remembers what happened in 2016, and I bet they don't, why would they? We had, I forgot exactly what it was, but we had the worst start of the year in history. We had the worst start of the year in history, or the worst start of the year in like X amount of years. And it was like a big thing. It was like, wow, we haven't seen this in a really long time, or we've never seen it before. That was the start of 2016. Straight down. I remember that day. It was pretty brutal. It was pretty brutal. And so it activated here. It activated on the zero line in its own way. So why did it go down? Why did it compress? Because if anyone understands something about waves, things have to go down big before they go up big. It's either in a very sharply it does it, or if it doesn't do it sharply, the only thing that can accommodate that wave structure is time. So if it doesn't happen sharply, it has to go sideways or down for a long period of time to satisfy it. There's only two ways it can do it. So it ended up needing to go lower, even lower, to go higher. But why did it do it? 856. 856 low on the VIX. Remember what I said earlier? 889 low on the VIX in 1993. So if you have the 87 crash up and it came down, it was the first downtrend from 87, and it touched 1889. And then lo and behold, we touched 856. And then we started getting this insane volatility. Now, if anyone remembers what happened in 2018, and boy, do I sure remember, we ended up getting the sharpest down move ever in history on a closing VIX basis. The VIX went from, I think, 17 to 38 in one day. It was the highest one VIX closing basis close ever. And that blew up the ETF XIV, the inverse ETF. And it closed at like 80, and then it went down from 80 to $5 after hours because there was an acceleration. It was some crazy stuff that people have never seen before. So something that's never been seen before, done before, etc. Why would that happen? Because this is an activation. This is a trigger. This is something you would call a trigger for the VIX. And the VIX is behaving like a bullish trend right now. And for it to be doing that right here and looking like this and behaving like a bullish stock is extremely alarming, and something everyone needs to understand, that in this environment that we are extremely euphoric with this type of setup, it is spelling absolute disaster. And I felt the need to make a YouTube video out of this because this is more important than anyone can understand, not even just for a stock market point of view, but actually for a societal point of view. Things happen in real life in the world based off of the stock market. You end up getting bottoms, you get recessions, you get terrorist attacks, tops, you get euphoria, you get bubbles, all this stuff, right? Things happen in accordance with what actually is going on. So if this actually happens, something is going to happen next year. And it could be very, very, very bad. I don't know what it would be. I don't know what it could be. I don't care. I'm just going to be, be a little careful. And I'm going to trade accordingly. People need to understand, all the Robinhood traders, all the people who just joined the market this year, this is a very, very real thing. Trust me, I don't scream from the top of the world and scream bear market, bear market, bear market, top, top, top. I love being a bear, but I've literally been a bull this entire year since the bottom. I bought the bottom, and I've been trying to sell my stocks and collect my money all year, but I can't because the market keeps showing its face saying that it's going to keep going higher. And it is so stressful because all I want to do is sell my stock, collect my money so that it's mine and I can just breathe. But the market keeps showing me that it's going to keep going higher. So I keep getting stressed out because I see how insanely bearish the market's going to be. And it just keeps showing in the short term that it's going to keep going higher. So I have this like conflict inside of me that's like eats at me. Like half this year I wasn't able to sleep. I had to like take sleeping pills and It was bad. It was bad, guys. So if you think you know what's going to happen, if people say, well, everyone's raising the guidance for next year, blah blah blah, this and that, it doesn't matter. Just like it doesn't matter that we now have more cases and more COVID insanity than we did in March, and yet we're skyrocketing. Wow, can anyone explain that? Wow, I can explain it. I can explain it because things happen exactly when they're supposed to happen, and waves need to complete themselves. You cannot be in a wave 5 and it just randomly reverses simply because you saw something bad in the news. And then you see all the monkeys on TV trying to attribute why we go higher. Well, maybe they thought this, maybe they said, no, that's not it. It has nothing to do with news. It has to simply do with the wave structure having to complete its wave. And then eventually, as the market starts coming down, they will just feed the bad news and be like, oh, now it's finally selling off because of the bad news. I guess the bad news just caught up with itself. It's like, no, it doesn't work like that. It doesn't work like that. Not in intra-trend moves, but end of trend moves, like the tops and bottoms of major parts. That's where you should get the news, appropriate news, very euphoric news, very pessimistic news. So as of right now, it's just all noise. So as long as people can understand what actually is possible and what, in my opinion, is going to happen, you can either sell your positions or trim your positions, buy appropriate protection, protect your 401ks, and in my opinion, the most important possible thing that anyone can do, don't sell at the bottom. I promise you, especially using this as proof. If we get this, if this happens next year, no matter how bad it seems, how bad it looks, do not sell. We will have the strongest bull run in history that will dwarf any bull run in history. It is going to be actually insane. So please, don't sell at the bottom. If you don't sell at all and you eat all this loss, just don't sell at the bottom. It will go back up and it will come back fast. Really, really, really fast based on the wave dynamic. So there's so much more I can talk about. There's so many waves, psychology, things I see, things I hear that can show that the market is going to go down big next year. But all we got to do, take it day by day. As of right now, I am fully leveraged to the upside the next month, month and a half, the top of the market. I am shorting for the first 6 months of 2021. From there, I will take it from there. Just understand what is possible and what is going on in the market right now.
If you have any questions, concerns, or if you want to disagree with me or read me out, you can get me at Grim Barbs at Twitch. I stream every day. And yeah, looking forward to talking to people or meeting new people or helping anybody who wants help from this. I see what I see, and I think it's very, very important that people at least acknowledge what is possible. Thank you. Bye. Peace, peace, peace.